Hi, in today's webinar, we have two accomplished individuals from the DSP BlackRock team. They take us through the DSP BlackRock Liquid ETF. I have with me Gauri Sekaria. She's the fund manager of DSP BlackRock Liquid ETF and DSP BlackRock Equal NIFTY 50 fund. She has over 12 years of experience in managing passive funds. She's an FRM, GARP from the US and an MSc in International Securities, Investment and Banking from the Henley Business School, the UK. And I have Anil Ghelani, CFA. He's the Senior VP working with DSP BlackRock Group since 2003, currently responsible for passive investments and products. He is also serving in a voluntary capacity as Director of the India Society of the CFA Institute. As always, these webinars are conducted by Zerodha exclusively for you. Now, over on to them.
Sure, wonderful. Thanks for the kind introduction. Good afternoon, friends. Wish you all a very warm welcome to this webinar on liquid ETFs. What we'll do is, over the next about 10 minutes or so, we will go through a brief deck which will outline the features of the liquid ETF, what the product does, how you as investors and traders on Zerodha platform can utilize the liquid ETF for your benefit and as a part of your investment strategy. After that, we will open up the call for a very engaging discussion and Q&A session, which is the second section of this particular call. So with that, I'd just like to jump into the brief deck and take you through the key features of the product. So we'll keep a brief presentation as an anchor for our discussion, but I'll make sure it's as free-flowing as possible. So just to kickstart from our perspective, to introduce us as DSP BlackRock, we are a fund house with about 20 years of experience in the domestic marketplace of running mutual funds, passive funds, active funds across the entire spectrum of equities, fixed income. From our side, the quick background about DSP Group is that we have more than about 150 years of experience in the domestic marketplace. DSP Group is known as one of the leading pioneers in the financial services space, having been one of the founding members and first directors of the Bombay Stock Exchange way back in the 1800s. DSP BlackRock, on our DSP BlackRock mutual fund platform, about a year ago, we have started our passive investments range, which include various products. And one of the products which we are talking about is the liquid ETF today. From our perspective, I would now like to request my colleague Gauri to take you all through what the liquid ETF is, how the product is managed, and what can be the utility for you as an investor and trader on the Zerodha platform. So over to you, Gauri.
Thank you, Anil. Good afternoon, everyone. Thank you for joining us today on the webinar for Liquid ETF. So in the next couple of minutes, we will cover what exactly is Liquid ETF, how as I mentioned, it trades both on the NSE and BSE, and the minimum lot size to buy on the exchange is just 1 unit. It's just like buying a share. Just the way today you can buy 1 share of, let's say, ICICI Bank on any of the exchanges, You can buy 1 unit of liquidities on either the NSE or BSE. What is important to note, however, is that having a demat account is compulsory for any investment in liquid ETF. Now, this scheme is benchmarked against the Nifty one-day rate index. So you know that your returns are in line with the overnight returns as indicated by the index. Now, what are the benefits of buying a liquid ETF? Like I mentioned, it is just like trading equity shares. This is listed on a cash market segment. Although it is a debt exchange traded fund, it is listed on the cash market segment of both the exchanges. It is very convenient, and you begin to earn interest from the very day it is credited to your account. And it's also relatively reliable as it invests in very low risk assets like CBLO and repo. Now, coming to the product, today when you trade, typically what happens is, let's say again, taking the example of ICICI Bank, you sell shares of ICICI Bank today. The shares get debited from your account tomorrow and you receive the sale proceeds day after. Now, you can either invest it back into equities that day, or you ask for a payout, wherein the money is transferred to your bank account, or you just leave the money lying idle in your account. Now, this is typically the current scenario, right? Now, using liquid ETF, what you could do is you could manage your money more efficiently. So you will sell ICICI Bank shares today. But what you would do is, instead of waiting for T+2 when the payout is made, or T+3 when the funds get credited to your bank account, you will go and purchase liquid ETF for an equivalent amount. So let's say you sell 2,000 rupees worth of ICICI Bank today. You will subsequently place an order for 2,000 rupees worth of liquid ETF on the exchange. So what you would typically do 2 or 3 days hence, you would do it at the time you sell your shares. On T+2, what will happen is, on T+1, your shares get debited. T+2, liquid ETF will get credited to your demat account, and you begin to earn interest from T+2 itself. So in that sense, it makes the entire process very efficient, and it is the best and convenient way to utilize idle cash between trades. Now, you could instruct your broker as and when you trade to subsequently buy liquid ETF, or similarly sell liquid ETF to fund purchase of your equity shares. You don't have to go through the inconvenience of receiving and depositing a check into your bank account and then waiting for the check to clear. So you just do away with all those hassles. Now, since this is used predominantly for trading purposes, one other added feature of liquid ETF is that you can use it as collateral on both the exchanges, NSE and BSE, with a 10% haircut. Now, what is this product all about? Now, if, like I mentioned, that this is the most ideal way to utilize your cash between trades. So it's typically suited for people who trade often on the exchanges. And the most convenient aspect of using this product for trading is that it has a constant NAV. The NAV of this product is fixed at 1,000 rupees. On the exchange, if you are going to buy, you will see quotes between 999.99 and 1,000.01, and volume will not be an issue. You can buy and sell as many units as possible, because we have an authorized participant at any given point of time to absorb the units or supply the units. Now, since the NAV is fixed at 1,000, any returns that you get will be in the form of daily dividend reinvestment. So the returns are in the form of units that will be credited to your account once in 15 days. Now, you will accrue the returns on a daily basis. However, for efficiency and ease of operational aspects, the units are credited to your demat account once in 15 days. On the exchange, you can buy and sell in whole units, as the minimum is one, like I mentioned previously. Now, in case of fractional units, which you may receive as part of interest accrual, you can always approach the fund directly to redeem such units. There is no securities transaction tax since this is a debt product. And the returns, like I mentioned, is in the form of daily dividend, which is compulsorily reinvested into the scheme. So that is largely what the product is about. And we are happy to take any questions that you may have regarding this.
So before we open for questions, just to summarize, I think it's a great opportunity to connect with all of you in a day like today, when overall we are talking about both the large cap indices like Nifty and Sensex up about 0.5%, and the small cap indices up about 1.5%. We are not talking about any directional perspective or any views on the market. You are better judge, and you are doing it absolutely fine at your end. What we want to discuss about and bring on the table is a tool which can be used as a convenient solution for better managing your cash in between these trades, or structurally for holding some cash while you think of your next idea to invest into. So with that, I would like to hand over the floor to my colleagues and friends, Nikhil and team back at Zerodha, for taking up any questions that might have been posted. And do feel free, friends, to raise any questions, comments, suggestions. Very much keen to have a very engaging discussion. Thank you.
Thanks for the introduction, guys. That was very interesting. So a few of our users have questions. So the most basic one, which I want to get started off with, how does a user who's using a regular trading platform access the fund and start investing or trading in it?
So as we mentioned earlier, liquid ETF, DSP BlackRock Liquid ETF, trades on both NSE and BSE just like any other stock. So typically today, if a user is using the Zerodha platform to, let's say, buy shares of ICICI Bank or Reliance or XYZ company, he will similarly be able to view DSP BlackRock Liquid ETF in the cash market segment. So it is just like placing the order for any stock. There is absolutely no difference. So to that extent, you can view this as a share on debt returns rather than a mutual fund unit, because it trades just like any other security.
All right. Just in continuation with the same question, since it trades like any other security, does it fluctuate like any other security, or is this a more stable kind of a stock to trade for? Like, I mean, most of the clients at Zerodha are from the equity markets, and they're all used to watching charts, seeing prices fluctuate, and stuff like that. So what do you have to tell them?
Yeah. So as far as price fluctuation is concerned, see, it is important to note that this product is predominantly meant for those who trade in equity markets. It is a debt product which they are using to park their idle cash between trades. The returns are debt returns. Now, in line, to be in line with debt returns and to also make the entire trading experience very convenient and seamless, the NAV is constant at 1,000 rupees. Now, when you buy or sell on the exchange, it has to be typically close to the actual value of the fund, which is 1,000, which is why you will see bid and ask at 999.99 and 1,000.01. So you will be able to buy and sell within that spread. So to that extent, there is no volatility in prices and prices do not fluctuate.
I'm again asking you questions as someone who hasn't read the product document, because that's what people do. They don't read it. So the minimum tick size, or I mean, how much is the lowest amount of money that I could invest in this, stuff like that, like so that a guy who doesn't read the documentation gets a clue on how to get started.
Yes. So like I said, as less is 1 unit, the NAV of 1 unit is 1,000 rupees. So 1,000 is what you would ideally allocate to this, the minimum amount plus the charges, which are again very minimal.
All right. And how does the taxation work for liquid ETFs? Because historically, ETFs haven't really taken off in India. So how do you see this change over the coming years? Like, will the taxation benefit them?
So I think I'll try to answer this from tax perspective. The liquid ETF does not have as much as frictional tax as any other equity ETF, because for the simple reason that it's a fixed income product, there is no STT levied on the purchase and sale of the liquid ETF. So the key frictional cost which a equity ETF faces, that is a STT, that is not applicable over here. The only tax which can be thought of is that when the fund is declaring dividends, the dividend distribution tax is paid. But from an investor's perspective, I completely understand. The earlier question was very valid question, that my typical trading on the Zerodha is on some particular stocks or commodities or somewhere where I'm seeing some chart and I'm trying to at some points of time capture the volatility or predict the volatility and the movement of that particular security and trying to invest over there. Here, I'm trying to just allocate that money in a stable, steady return till the time I spot the next opportunity to make money in my equity or any other commodity or derivative security. So the income I earn from holding the DSP liquid ETF is going to be in the form of dividends, which will be declared on a daily basis. So every day I'll be getting the dividends, and the dividends received in my hand as an investor are going to be tax free to me.
Got
So,
it.
yeah, so in that sense, it's very simple. Even from accounting perspective, etc., it's very straightforward that the dividend has come, but don't worry, dividend I don't have to pay any tax or keep track of that, and the NAV also is going to remain constant at 1,000 rupees. So it makes the thing in that sense structurally much more simple. Though completely agree, you made a very good point. In some way, slightly quote unquote boring for some other asset class or other securities, because you are wanting to capture some kind of a movement.
Got it. So, but the thing is, like, one of the other parts of the question which I had was that ETFs haven't really taken off. So, is there anything you guys are planning to get people more aware of these kind of products and education stuff like? So, one is this webinar. Is there
Sure.
anything else that's being done from your end that will get more users in?
Sure, absolutely. I think with partners like you who are more focused on not just structurally pushing any product, but in structurally educating people and making sure the right type of products are available. So with partners like yourselves and with webinars like these, definitely we are doing a lot of effort in hosting multiple such webinars, thought leadership pieces, etc. We are constantly in touch with the various other stakeholders in the ecosystem of the ETF in trying to make it more and more liquid, in trying to make sure there is a better understanding and awareness of passive investing in general, not just ETFs. Passive investments can be in the form of either ETFs or index funds. So depending on which part of the market you want to capture the investing universe, we are trying to create multiple unique products which can benefit the investor at a very attractive investment proposition. This particular educational type of a session today we are doing is for liquid ETF, where the underlying is only a fixed income kind of a returns. However, let's say, for example, one other product which we have is on equity side, that is called the Nifty Equal Weight, or NEW as we like to call it, or in some other context, we have termed it as hashtag perfect pachas. So perfect and pachas means 50. So like we created a particular index where we'll use the 50 stocks of the Nifty. We apply two basic principles of investing. One basic principle that the stocks that you own, the companies that you own, should be leaders in their business segment, should have the capability of riding through multiple business cycles. So, well, one such basket can be Nifty stocks. You know, all the 50 stocks in Nifty are in that way leaders in their market segment, etc. And the other basic principle of investing, that my portfolio should be well diversified across stocks and sectors. So by equal weighting each of the 50 stocks, we have tried to achieve as much as possible a well diversified portfolio across stocks and sectors. And then we package it into a very simple passive fund, like an index format called Nifty Equal Weight. And this type of product can be also used very simply at some point of time to express views on the equity market, where you don't want to take any single 2-3 stocks exposure. You want overall broader market type exposure. You can just come into this product, exit when you want, zero exit load. And we are trying to create awareness by these type of simple products, take it to investors who are otherwise not very equity friendly or who are not very savvy investors. So just to put it into context, when we did this particular fund about a few months back, we were able to reach out to a very wide, large audience through digital media, through educational type of initiatives with partners like yourselves at Zerodha. I'm sorry, for this event specifically, we didn't do a webinar of sorts with Zerodha, but multiple such areas. And we were able to, I think, gather about 20,000 investors, right, Gauri, in the Nifty Equal Weight NFO, which we did in October of 2017. We got about 20,000 investors participating. So
That's nice.
we are trying in a very big way to spread the awareness and take it to the investor in a very simple and friendly manner, not in a black box manner that, oh, I've done something very fancy and don't ask what's in the black box, just invest. You know, typically people don't like it like that. They want to see through. So it was completely open architecture, completely see through white box kind of approach. And we are trying to do many more such products in the next couple of months with which will go to the market. Liquidity of being just one of such products.
All right. So what's the kind of return a person could expect on a yearly basis instead of like leaving money in the bank? If he puts his money on this fund,
Sure.
what's the kind of return he can expect, the difference in return?
Yeah, very good point. See, very often what happens is one is that you leave the money in the bank. Now, depending on how friendly your bank is or how unfriendly your bank is, let's say some of the large private sector banks typically give returns on your savings account in the range of 3 to 3.5%. Or other way around, sometimes what happens is that the money does not even lie in a savings account, you know, depending on the nature of your account. Sometimes it's a current account, or, you know, it just lies idle without earning anything at all. In the DSP BlackRock Liquidity ETF, typically the rates of return will be in line with what the overnight rates are. So let's say today the overnight rate of return is anywhere in the range of 6 to 6.25% annualized return. So let's assume on a safe side, let's say anywhere in the range of 595 to 605 type of returns, like 6% in and around that range is what returns the investor can expect. Another important thing is not just the returns or in terms of number. I would like to see this product in a different context, that besides the percentage return, it gives me much more returns in terms of the flexibility and the convenience, that I don't have to worry that my money is lying idle or it's lying in the midst somewhere which I don't even realize and I can't see. It's very much convenient in my DP account, basically my Demat account with Zerodha itself. As per the example Gauri mentioned, let's say I've sold stock of, let's say, Infosys Limited, and instead of that, in parallel to that, when my Demat account sees exit of Infosys Limited, equivalent value worth of DSP Liquidity ETF has come and sat in my Demat account. So it gives me a very clear vision that, okay, now today this much amount is still lying in these 10 stocks or these futures and options positions, and in return of that, I have got my DSP Liquidity ETF worth so much value. And at that point of time, I can make decision that yes, DSP Liquid is also marginable security recognized by the NSE as well as BSE. So I can use it for the purpose of placing it as a margin for my further exposures in the futures and options segment of the fresh trades I'm going to do. So,
That's nice. That's nice.
This is how I like to see my returns in total return concept, not just percentage return context, but everything. I can see returns.
I got it.
convenience and marginability of the security.
So you get a consolidated view of all your holdings, including your free cash. In that sense, you can interpret liquid as cash which you have. So you get a consolidated view of your overall holdings, and you don't have to switch between two platforms. You don't have to keep switching between your trading account and your bank account.
Got it. Got it. That's very interesting. So one of our users has just posted this question. So I thought I'll shoot it across to you guys. Will the investment process change given that BlackRock and DSP have split?
Very good question, and thanks for raising that. Let me give a very clear answer for that. There will be no change in the investment process as a result of this proposed shareholder change. For us, the day-to-day operations on ground, whether it's for the passive investments like a DSP BlackRock Liquid ETF or the Equal Nifty 50 product, everything remains the same. Systems, processes, people, everything remains the same. Yes, you will see some change. What will be the change? The name of the fund is called DSP BlackRock, and then Liquid ETF. Now it will be just DSP Liquid ETF. The logo and the banner that you see behind me over here is called DSP BlackRock in some blue shade. Maybe that will become only DSP, and it will have some, maybe a black shade or some other color. But other than that, from a pure investment perspective, from the way in which our investors' money or your users' money who has raised this question will be managed, will be exactly the same. There will be no change at all.
Excellent. So another question which I've just received from one of my users is how is this actually different from, say, Liquid Beast, which is I think offered by Goldman or Reliance right now. So how is this different from the Liquid ETF? Liquid Beast, which is what I think most people who are in the markets are used to using as cash collateral or putting in their money for safe returns.
There is absolutely no change in the product. You can now view it as, you have an alternate to what is already there in the market. It works exactly the same way. The underlying is exactly the same thing. The only difference, what I believe, is that while Liquid Bees credits your account, dividend units once in a month, we are crediting it once in 15 days. That is the only difference.
Nice. Cool.
So I'll take just 30 seconds more on this question. To put it in context, till now, we used to have only one option. Till now, if you wanted to have coffee, you had to go only to one coffee shop. Now that same type of a coffee, if you want to have, there are two shops next to each other. You have another option to select DSP Liquid ETF in lieu of that. Otherwise, everything remains same, similar type of coffee, similar fragrance. However, we have tried to make the fragrance a little bit stronger by going a little out of way from our side, from our operation side. It's a more difficult thing to do, but we will be doing it more as an investor-friendly gesture, that we will try to credit the dividend accrual or the units into the DP account of the investors much more faster.
All right, thanks for that. So another question just came in. So people, there are a lot of small traders, big traders, all kinds of investors that exist. So one of them wants to know how can he, redeem fractional units? Is there a possibility to do that?
Yes, there is a possibility to do that. Like I mentioned earlier during the webinar, on the exchange you can trade only in whole units, right? Minimum unit being one. Now for fractional units, you can always approach the fund house directly to redeem it at any point. So that is going to happen pretty seamlessly.
Okay, and that could be done online by the user if he needs to, or does he have to physically present himself at an office or something?
So not physically present himself, but there is a small instruction which has to be filled and just sent across to multiple offices or our registrar, like a CAMS office, and that can get processed and amount will be credited to the investor's account. So I mean, physical presence of the investor is not required, but it's just a application form which has to be sent.
All right, all right. So I know you've explained this already in the beginning. So once again, just briefly, what's the underlying for this liquid ETF, for this DSP BlackRock?
It's predominantly CBLO, collateralized borrowing and lending obligation, as it is called. And we have investments in other overnight, very low risk investments like repo and government securities.
All right. I think those were really interesting answers to the questions posed by our users. And would there be a way for them to reach out to somebody from DSB if they have to ask any questions, or do they come to us and we send them over to you?
Absolutely, we are very open. Being the fact that they are your users, you can very well route them through Zerodha channels as itself. It will be much more efficient. However, we are also open at any points of time. You can share either my email ID or my number, or we have a presence across most of the key cities with offices present, so they can definitely reach out, and we'll be most happy to try and resolve any queries or any questions that might be there in the minds of your investors and users.
All right. Thank you so much. Thanks, both of you, for your time. It was really interesting and informative. And I'm sure you'll see a lot more users from Zerodha investing in this particular liquid ETF. Thanks
Sure.
for your time. Have a nice day.
Thank you very
Thank
much.
you so
And
much.
from our side, I would like to take this opportunity to thank you, Nikhil, Faisal, and the colleagues at Zerodha for this very educative and informative session. I do hope that your users find it interesting to utilize, and any further inputs, do feel free to reach out to us. Thank you very much.
Bye-bye.
Bye.
Bye.